Imagine a road where everyone is driving forward. For years, people were told there was only one direction: electric cars. Posters said it, ads said it, governments said it. Then something strange happened. Car sales in America started going up again. Dealerships got busy, parking lots filled up. But electric cars slowed down. Gas cars came back. If electric cars are the future, why are Americans buying fewer of them today? The answer has nothing to do with technology. A few years ago, electric cars felt magical. They were quiet, modern, and felt smart. Buying one felt like joining the future. Governments offered tax credits and incentives. Companies promised lower running costs. People felt confident choosing EVs. Sales grew fast, and it seemed like nothing could stop the electric wave. Everyone believed the road ahead was straight, bright, and electric. Then reality stepped in. Electric cars cost more up front. Charging took time. Public chargers were not always available, and repairs felt expensive. Meanwhile, gas cars remained cheap, familiar, and easy to maintain. Incentives began to fade. People didn't stop liking EVs, they just started choosing what worked best for their lives today. Comfort and convenience mattered more than trends or promises. But there is more to the story. Supply chains, global chip shortages, and production delays slowed EV availability. Dealers often had fewer electric models on the lot than traditional gas cars. Consumers faced long waiting lists or higher prices. Meanwhile, gas cars were immediately available and often offered attractive financing options. The market was sending subtle signals. Today, practicality beats hype. At the same time, energy concerns influenced behavior. Gas prices fluctuated but remained predictable. Electric charging stations were growing, but uneven distribution made long trips stressful. People realized that future-friendly technology doesn't always fit into the patterns of daily life. In a sense, the auto market was behaving like humans always do. They value reliability over novelty. Financial incentives played another role. As subsidies declined, EVs became more expensive relative to gas cars. Buyers who once rushed to get credits now reconsidered. With higher loan rates or limited tax breaks, the economic math changed. The same story repeated across cities. Parking lots full of gas cars, EVs fewer than expected. It was a quiet retreat, not a collapse. Cultural perceptions also shifted. Early adopters of EVs were proud, vocal, and highly visible, but mainstream buyers watched cautiously. Social proof matters. If neighbors, friends, or family chose gas cars, hesitation grew. The psychology of buying became as important as the technology itself. Meanwhile, automakers adapted. Some increased gas car production to meet demand. Others diversified their lineups, offering hybrid models or more affordable EV options. The industry learned that a sudden switch to electric was unrealistic. Consumer preferences are rarely all or nothing. By the middle of this story, it's clear. Rising U.S. auto sales coexist with slowing EV adoption because the market is human-driven. People make trade-offs every day: cost versus innovation, convenience versus environmental ideals, availability versus desire. These choices shape markets far more than marketing campaigns or futuristic promises. Even investors noticed. Stock prices for EV companies fluctuated based on adoption rates, but traditional automakers gained confidence as sales rose. The market rewards what people actually buy, not what experts predict. Economics isn't abstract, it's human behavior translated into numbers. By the climax of the story, the lesson becomes clear. Electric cars are not failing, they're evolving within constraints of price, infrastructure, and consumer habits. Gas cars are not invincible. They persist because they meet immediate needs. The auto market is a living, breathing system where convenience, cost, and culture intersect. In the final takeaway, the auto market teaches a simple truth. Trends and hype influence perception, but human needs drive reality. Markets don't follow predictions, they follow people. People buy what works today, not what promises perfection tomorrow. Understanding these patterns explains why U.S. auto sales are rising even as EVs retreat, and why innovation must always meet human needs to succeed.
If this helped you see the market in a new light, keep watching, stay curious, observe patterns. The story of cars is the story of people, and the choices we make every day shape the future more than any trend ever could.